Hello and welcome to Fortune Foster's Q3 Market Update. My name is Alex Nolovich. I'm the Director of Research and Strategy in Fortune Foster. Really happy to be here today. It's a beautiful day, as maybe you can see right now in the sun entering this room. But we're in beautiful 29 Harriet Street in Hamilton, our new office. We just moved here a couple weeks ago. We're really excited. You can see some of the work that we've done here already in the room that we're in, with some of the painting, the restoration of the floor. This is located right downtown Hamilton. It was originally a cigar manufacturing building in its original use. We purchased it from Felton Brushes, which are located in Burlington Street in Hamilton now, and we actually have some space that's available in this building. So if you know of anyone or you yourself would like to operate in a space like this, feel free to reach out. As you can maybe see in the shots that are precipitating right now, you can see has a fantastic location with the park, the water's nearby, some development of the downtown. James Street's right there too, so we're more than thrilled to be able to reactivate another what we consider a gem in the city of Hamilton. Okay, just to get into the actual Q3 update, we had $434 million worth of commercial real estate volume that traded. As you can see, last year we had 471, and the quarter before we had 885. So it is lower than all of those other numbers that we're seeing here. It's a little lower than last year, but still very much in that range that we'd like to see. Anything over 400 is fantastic. That 885 number comes from, if you tuned in from the last quarter's presentation, we had a massive sale. It was the biggest sale, not just for Hamilton, but this entire area. It was about a $500 million deal from Slate that purchased the Stelco lands. So that was a huge outlier. 885 is almost a total for an entire year. Maybe back in 2017 it was around there, about 900 million for the year. So a huge outlier there. But overall, this past quarter was very healthy, and we can see it was actually the fourth highest quarter that ever transpired in Hamilton. The gold bar on the very right is his previous quarter. The a little bit more lighter yellow colors are other previous Q3s, and then the other white ones are other previous quarters. So you can see again, it was the fourth highest quarter that we've seen in Hamilton going back to 2017, and it was actually the second highest Q3, and we saw that in the previous figure there as well. Looking at the transaction volumes, is actually again still in line with last year. Last year saw 83. This year we see 88, and last quarter we see 100. So a huge volume, huge quarter from Q2, as we talked about in the last quarter as well. But again, Q3 is a little bit lower pace. September is typically the slowest month for commercial real estate. So that's why you can kind of see when you compare it to last quarter why the number's in the 80s, and you can see it in the 100, of course, for Q2. And you can kind of see that in this next graph here. So what I want to focus on here is the red. The red is this year in 2022. And all the previous lines just give us an indication of how the market really trends and where we kind of see the volumes of commercial real estate transactions take place. So as I mentioned before, July, August, September is Q3. So you can see traditionally Q3 is where things start to go down. You can see there's one line that's an outlier in the previous months there that really dipped, like historically low compared to the other ones. That's when COVID initially hit. So you can see its real impact there when people were trying to figure things out, what was happening. Nothing was trading at that point. And then in the summertime of COVID, things peaked back up again to normal levels. And as you can see, we're actually above traditional values that are normally lower in August and September, and we're about halfway, and that's about 2021. We're at the same volume as for 2022. So overall, the volumes that we saw in 2022 Q3 were really good. And as we look into the asset class, we're about on pace with the previous year as well. So white is Q3 of 2021, gold is for this past quarter of Q3 2022. So ICI land, very big, industrial, very big, residential land, about halfway between the two. Sometimes we see res flip for ICI. But in this case, not the case, but really good to see that residential is higher than last year. Mixed use, retail, a little lower than last year. Multi-res, pretty much on par. And then office is really the only one that maybe sticks out. It sticks out because we saw office last year, as you can see, is about $25 million worth of real estate that traded. We saw right now, you can see 50, so almost double. So what does this mean? Is office coming back? Well, let's look into it a little bit as we talk about the top 3 transactions that occurred. And when I say top 3, I mean the most expensive. And this was the third highest value transaction that occurred in the Q3 for Hamilton. This is 35 Upper Centennial, sold for just over $26 million. This is located on the mountain. It's a vesting order sale. It's about 92,000 square feet, which sells for $280 a square foot, which is a good price for medical office. Usually medical office trades for a little bit higher than traditional office. And this is about on par for office value in general. So maybe why it's a little lower in terms for medical sales is the fourth floor is vacant. So I'm sure that had a little bit of an effect to that. And it's a fairly new building. I believe it was built in around the 2013 year. Yeah, so it's just a really good transaction, 26 million. We don't see office transactions really take place anymore. They're not as commonplace, but when we do see office transactions, it's usually in that 1 to 3,000 square feet, which isn't as high valued as obviously something that's 92,000 square feet. And people that purchases those types of units are usually single occupiers. And something that we're also noticing now is that the office transactions that do take place are usually medical related. So if there's anything that's really showing us right now in a post-COVID world, at least in Hamilton, is that the office is being reused and is being attracted by the medical industry. So whether it's dentists, regular GPs, orthodontists, they're fairly clearly seeing through what market data is showing that they still need a physical space to operate their business. Moving on to the second most expensive transaction, it was 444 Stephen Street. This is in Stoney Creek. It's a very, very large industrial building, over 200,000 square feet, sold for $41 million, which just puts it over a hair over $200 a square foot. And this is absolutely massive. We have started seeing values for industrial buildings going over $200 square feet, which is huge for Hamilton. We've seen some really small ones, like industrial buildings, sell for about $250 a square foot. So to see something over 200,000 square feet going for $200 a square foot is unheard of for this region. And so it just really shows the absolute demand that there is for industrial. And that's what we saw in the previous graph, why there's a huge demand for industrial land, because there's just no industrial right now and everyone's looking to build more industrial. CBRE released their Q3 statistics, and if you look at any of their subject markets, they follow London, Waterloo, and Toronto. That's closest to Hamilton. All the industrial is about 1% or below for availability rates in this region, and that's why we're seeing values just really skyrocket for industrial, but also for industrial land too in Hamilton, and we'll touch on that a little bit later. The most expensive transaction that occurred this past quarter was on the mountain, close to Stoney Creek. It's 212 Glover Road, sold for $82 million. You may have read about this in the paper. The Spec did a nice piece on this, and this is IKEA properties. They're going to be developing a new facility on the mountain here close to Nebo Road. It's a nice little node where an industrial pocket is starting to develop up there. It's 65 acres. So 65 acres for 82 million equates to 1.23 million an acre. It's going to be a fulfillment center of sorts as well. And that's high value. Anything for $1 million an acre for industrial is really good. And we're just starting to see this year and last year for this types of value for industrial. But again, similar to what we just saw for Seaman, it's a huge site. So to see a huge site go for something over $1 million an acre is fantastic for Hamilton, and again, reflects the demand for industrial in Hamilton. And we're already seeing some industrial land transactions go for $1.5 to $1.7 million an acre, and I expect that just to continue to go up as the demand for industrial land continues to go up as well. As I mentioned, this is becoming a kind of a new node for industrial, and something that was also mentioned is that Sierra Supply Chain Services is going to be opening up a $65 million facility in this area as well. It's going to be 164,000 square foot expansion, which is going to be a total of 250,000 square feet, so it's fantastic to see this area starting to develop too in Hamilton. And I want to touch on another development too. There wasn't a lot of new developments that were announced in Q3, but there was amazing residential land purchases here that were basically providing new updates for new developments that were happening. And maybe the most interesting purchase that occurred this Q3 was 98 James Street South. If you're from Hamilton, you might know this one fairly well. It's had a tumultuous history, but I'll get into the details right now. It sold for $24 million, 0.32 acres, which puts it at $75 million an acre, which is an outrageous value for a per acre price for residential land in Hamilton. Milborg Group is affiliated with the purchase. If you don't know it, it's a condo development that's been going around since 2014. It's known as the Connolly. It used to be James Street Baptist Church. As I mentioned, it has a tumultuous history. It was purchased in 2014 by a developer by the name of Louis Santaguida. It was then sold in 2018 to another developer for $8.5 million, which is $25 million an acre, to Hugh Developments. And now Hugh Developments has sold it to an unknown group. We don't know who it is yet, but again, I mentioned Milborg Group is affiliated. And Hugh Developments had approvals for a 31-story, 315-unit development. And the spec did an interview with TU Developments. They mentioned that the construction is going to be to stabilize the church, which will start this year. And the city has approved heritage and building permits, and it will be transferred to the new owners, and the project's architects will remain involved with the project. So maybe this provides some color to why we see a $75 million an acre purchase, usually for high residential land in Hamilton. We can see sales from $9 to $13 million an acre, so obviously it's a huge increase in value. So maybe this shows that with some certainty in place, you can better underwrite and really derive a higher value into potential residential land for development. But it remains to be seen exactly what's going to take place here, and I'm looking forward to seeing who is actually the actual purchaser here, and if they actually do intend to continue on what was proposed by Hugh Developments here. Some other transactions that took place in the residential side of things: 100 John Street North and 61 Wilson Street. It was purchased for $8 million. It's residential land, as noted before. It's almost 0.6 acres. It sold for $13.8 million an acre, which is great. As I mentioned, that range between 9 and 13 is where we see things for high density residential land in Hamilton. See something go for 13.8, which is great. You're starting to see, obviously, it's pushing the ceiling for residential land. And it was purchased by Emblem Development. They're currently developing the Design District, which is across the street to the west there. So that parking lot you can see in this image to the west, that massive thing, is being sold and marketed as the Design District. It's 3 towers. As we can see in this next slide here, this is a rendering of it. They've already sold 1 tower. They're currently selling a second, and they're already under construction with another site in Hamilton called One Jarvis, and I believe that's 5 or 6 stories in the air right now, last I checked. So really excited for this developer as they're really, I guess, tripling down on the Hamilton market with their third purchase here in the city. Another residential transaction that was really interesting, which even closer to the core, is 150 Main Street East, 6 Walnut Street South, and a few other addresses, I think 3 more in addition. Sold for $6.1 million, 0.64 acres, which makes it $9.5 million an acre. And you can see it's bisected a little bit by this laneway here, but it's a great site, has many corners, many frontages. And this is also close to some developments too. Across the street to the east there, it doesn't show in this image right here, but Walnut Place there, it's a brand new rental apartment by Rancor. It's already operating and undergoing. And then that parking lot to the west there, you can see to the left, is owned by a developer, and no plans really for what that site's going to be. But again, this is right in the core of Hamilton, so lots of development that's slated to go, and that's already in fruition. And then the last transaction that I want to talk about that was residential related was 428 Main Street West. It sold for $2.25 million an acre. It's something you don't see all the time in Hamilton. This is a 50% purchase sale here. It's almost an acre at 0.8 acres, and at that purchase price puts it at $2.8 million an acre. But keep in mind, again, it was for 50%. So if you want to kind of just double it to maybe get an idea for what the true value is for the land, it's about $5.6 million an acre, right? It was originally purchased in 2017 for $3.6 million, so you can see that appreciation there. And it was purchased by Lamb Development in 2017. The new 50% purchaser now is New Horizon Development Group. And it's great to see because Lamb Development, they're doing tons of stuff in the GTA. They're currently undergoing with the Television City condos in Hamilton. And New Horizon Development Group is probably the most aggressive and active developer in the city, I would say. So it's great to see that they're potentially involved with this project. And I think it's going to be slated for some sort of mid-density type of development. Across the street, there's a Dairy Queen that was purchased a few years ago. That's currently 4 stories in the ground for foundational work. That's going to be the Westgate condos, and then to the east of that was purchased by 3H, and that's going to be another residential development down the line. So as I mentioned, not a lot of new developments were talked about this Q3. This is the only one that I could see of. 639 Rymel Road West. This is on the mountain. Was purchased by DiCenzo Homes. 12 stories, 165 units rental. So it's great to see a little infill development, if you want to call it that, on the mountain that's going to be taking place in Hamilton. So that's it for the development news and the residential transaction news. Just some quick things to end on, just some updates about some general news in Hamilton. Hamilton has hit $1 billion in construction value in just 6 months. It's a new record in terms of the pace that they hit $1 billion. Last year we hit $2 billion, which was a new record for Hamilton. We've hit $1 billion worth of building permits for 10 of the last 11 years, and this is the fastest we ever hit 1 billion. So hopefully we can get close, or we can surpass 2 billion by the end of the year. Something also to keep in mind, this is the last thing I'm going to end on right now, is the Spec did a fantastic investigative piece on OLT decisions. If you don't know what the OLT is, it stands for Ontario Land Tribunal. It's basically a provincial body that looks after disputes for anything to do with land. That's a very basic explanation of what they are. So September of this year, an analysis was done by the spec into the OLT decisions. There was 178 decisions that were provided. 172 of those decisions were favored towards the developer, meaning that only 6 were not favored to the developer, obviously. So a huge majority of OLT decisions are favored for the development. And it might range in cases of it's too high, or it's too dense, not enough parking, things of that nature. And then if 2 parties can agree on those things, it goes to the LLT for decides. And in this case, a vast majority, about 95%, are in favor of the developer. 10 of those 178 were in Hamilton, and all 10 were cited for the developer in those cases. Many of the successful appeals at the OLT happen because municipal governments do not have the staff to proactively update zoning bylaws. In Hamilton, planners are carrying high loads of cases, about 40 files per planner. And that leads to the next problem, where developers appealing to the OLT because municipalities do not make decisions within the mandated timelines that you have to make a decision depending on what you're trying to do for your building. About 60% of the total started out as an appeal because municipalities neglected to make a decision within the timelines. And then further to that, in July of 2019, the Ford government dramatically shortened the timeline for municipalities to make decisions on development applications. The PC government also is introducing legislation effective in January that will force municipalities to refund development application fees to developers if municipalities do not make decisions on applications. And the head of city planning for Hamilton has said that they may just have to start recommending automatic denials, not because they don't disagree with the development, because they just do not have enough time and resources to appropriately provide a correct decision towards an application, which creates a vicious circle because many municipalities are already overwhelmed with applications. They use these fees to fund the planning department, and now if they miss deadlines, they'll have to refund those monies to keep them afloat, making it even more difficult to stay on deadlines. So it'd be interesting to see how this works. Obviously, there's a huge demand for residential land in conjunction with ICI, as I mentioned. Right now, the wind has been taken out of the sails of the condo market, the residential market, because of interest rates are going up. But all that demand is now being funneled to rentals because it's taking the buyer power from just traditional home buying and condo buying. People need to rent, so now it's creating, at least in Hamilton, where I'm seeing individuals put in forward $100 to $200 more extra a month on top of what's listing, putting 6 months down payment just to get a rental condo or a rental. And you're seeing that's where the action is being moved forward. So there's still very much a voracious demand for living space, and it'll be interesting to see if these policies that are being proposed, that are already in effect, are going to have a positive effect on the development world in Ontario. So that's it for the Q3 update. It'll be interesting to see how this existing legislation and future legislation has an impact on residential development. As I mentioned before, we're starting to see things shift towards rental, but from a commercial real estate standpoint, it was a very healthy quarter. It was the 4th highest quarter in Hamilton's history since 2017. And I expect the same things to see in the Q4. Obviously, interest rates are still going to have an impact, but obviously, as we saw in the data that we just saw now, not a huge impact that we've seen in this quarter, and it's still trending upwards and in a very healthy direction. So if you ever have any questions, feel free to reach out anytime. I'm happy to answer anything about the Hamilton market or the surrounding market. And please stay tuned for the next Q4 market, which will be upcoming in January of next year. Thank you.